Hello guys, I hope you enjoyed the last topic we took. It went well. So today we'll be looking into cost volume profit analysis, CVP analysis. Please stay tuned and do not forget to subscribe. Hello guys, welcome back. Today we'll be looking into cost volume profit analysis, CVP analysis. Then what do we mean by CVP analysis? CVP analysis is one of the most powerful tools that managers have at their command. It helps them understand the interrelationship between costs, volume, and profit in an organization by focusing on interrelation between the following five elements. We have five elements in cost volume profit analysis. Number one is prices of products. Number two, volume or levels of activities. Number three, per unit variable cost or variable cost per unit. Number four, total fixed costs. And number five, mix of products sold. All these serve as vital elements whenever we want to prepare our cost, volume, profit analysis. Given an analysis between marginal contribution and fixed costs, it is possible to predict the net profit which should emerge at various volumes of sales, whether expressed in units or in CVP representation. Application of marginal costing that seeks to understand the relationship between cost, volume, and profit at different activities level. Also, we should refer to break-even analysis. This is an analysis which shows the position where total costs will equate the total revenue. That is, where our the total cost incurred, we equate b is equal to the total revenue generated. We have different objectives of CVP, and we have assumptions of break-even analysis. CVP and break-even analysis are interrelated. Number one assumption of break-even analysis is it is assumed that there will be no uncertainty. So all other variable costs remain what? Constant, irrespective of the level of activities. Fixed costs also remain constant. So now I'm going to tell you some formulas I'm going to use. They are all simple. You can put your mind into it. Whenever you want to prepare CVP analysis, the first thing is to determine the break-even point in units. Earlier on, I've explained what break-even means. It means where the total point, total profit equates the total revenue. That is, no loss, no profits. It is zero. So the first formula to to prepare our BEP, that is break-even point in units, is fixed cost divided by contribution. And what is formula for contribution? Contribution is selling price per unit minus variable costs per unit. You get it? Next one, break-even point in sales value. So once they say in sales value, that indirectly they are telling you that what would be the break-even point of the units gotten in sales value. Earlier to it was said that break-even point in units is fixed cost divided by contribution per unit. Once we've gotten our break-even point in units, to get our break-even point in sales value is very easy. The BEP in units you've gotten times the selling price per unit. It gives what? It gives your BEP in sales value without applying CMR, contribution margin ratio. Here's the question. Goodness Shoe Limited produces and sells Gucci products. Forecast data for 2020 are sales unit 8,000, sales price per unit $24, variable cost per unit $16. So Goodness Shoe Limited fixed costs are estimated at $43,680,000. What is the break-even point in units and sales revenue? We are being asked that what will be our BEP in units and sales revenue. And do not forget, I said that to get our BEP in units, BEP points in units, it is fixed cost divided by contribution. So we have to take it one after the other. Solution. The first one, we've known our fixed cost to be $43,680. Next one is variable cost per unit. We know it to be $16, and our sales price per unit, we know it to be $24. Now to get our contribution, formula for contribution is fixed cost per unit, selling price per unit minus variable cost per unit. We know our selling price to be $24 and variable cost per unit to be $16. So our contribution is $8. Now we know our contribution to be $8. So let's start with the first question. A, BEP in what? In units. So, and the formula is fixed cost divided by contribution per unit. So the fixed cost is $43,680 divided by contribution per unit, which is $8. So 43,680 divided by 8, 4,3,680 divided by 8. This is 5,460 units. Do not forget to put units in whatever. 5,460 units. That's our break-even point. That is, for a company to make no profit or loss, it has to produce 460,000 units. For the company to break even, it has to produce 5,460 units. So the next question we are being asked is what that, and what will be what sales revenue? What will be our sales revenue? It says we are going to generate. And the other one, I said something that since you've gotten your BEP, in units, now it says value. Since you've gotten your BEP in units, to get it in sales value will be more easy. It's just be BEP. The formula is BEP in units times selling price per unit. You get it? So the BEP in units we got is 5,460,000 units times the selling price. The selling price per unit is $24. So to get our break-even in sales revenue, it be break-even point in units times the selling price per unit, which is 24. That gives 131,040. As simple as that. Or can use the other way, or we have something using CMR, contribution margin ratio. So to get CMR, it is contribution divided by selling price. We've known our contribution per unit to be 8 naira and our selling price is $24, sorry. So CMR will be 8 divided by 24, that is 0.33333. That's between the nearest 3, 0.3333. Using this, we're going to get our break-even point in sales revenue only. So BEP in sales revenue, that will be fixed cost divided by CMR. Our fixed cost is $43,680 divided by 0.333. Using your calculator, 43,680 divided by 0.333. This gives 131,503 approximately in dollars. As you can see, is likely with this, but due to approximation, this value was increased. But the simplest way is to use this BEP unit times selling price per unit. You get it? Thank you. The next one we are going to deal with is the advanced